I posted a live trade I took with my students on my Instagram, and it was a long setup on US30. I got asked the question, what was the entry based off of, because they didn't realize the PD array I was using, which gave me the idea for this video on this one hidden PD array you probably didn't know about. Make sure you guys are following me on Instagram at Arkhamtrades if you haven't already. Let's get into the video. The hidden PD array is essentially long wicks. It's rarely talked about from ICT, and it's only if you're an adamant ICT trader like me who watched everything from ICT to SMC and knows all the concepts, and through backtesting you pick up on these hidden PD arrays, which is also why I created this channel, to help spread my knowledge and shorten your learning curve to profitability through SMC and ICT. So drop a like and subscribe to support the movement. I'm going to break this down into 3 parts. The first part here is what I call the wick rejection order block. So I have a terminology. When I see a hammer candlestick, I call them rejection wicks. On the higher time frame here, like the H4, you guys can see we have that rejection wick, and as price reaches up into that rejection wick at those specific levels, we typically reverse, and you start to wonder, why did reverse on that long wick? Well, that's because on the higher time frames like the H4 here, it looks like it's a long wick, but on the lower time frames like the H1, it's actually a lower time frame order block inside of that higher time frame rejection wick. So when you do spot these long wicks inside of the marketplace, you want to anchor a Fibonacci from the low to high of that long wick, and the levels you want to put is the 50 and 75% of this long wick. As the market reaches into these levels, these are areas where it tends to reverse. No, it doesn't have to get into the 50% level, but it is the highest probability if it can get into the 50 and 75%. Now you may ask, when should I anticipate a reverse at this level, or would I know it's going to take out that low or high? And let's get into that. This is actually something that you can use to forecast whether price will be bullish or bearish. The body should not close below or above that 50% level, and definitely not near that 75% level. If we see the body closing below that 50% and eventually 75% level, this is called filling in the wick, and that means the market can be reaching higher or lower, in this case lower in price, to completely fill in that long wick to eventually taking out this low. But if we close with just a wick inside of these levels, that signals to us it came into that level, found a measurement of support or resistance, but in this case support, and immediately left it. Really strong signature that you want to look for in price coming into those levels, and then immediately trying to leave it with that doji or hammer candlestick confirmation, indicating price could not break above or below that level, signaling that reversal profile. But in this case, we broke below that 50% level, indicating strong selling. It could not hold inside this wick, and the next candlestick we see that drop lower. And now, how do we apply this information? Your best use case is to identify these long wicks on the higher time frames like the 1 hour, 4 hour, and even sometimes in the daily time frame. And as we come near that 50% and eventually 75% level, we want to go down to a lower time frame, anticipate a break away from those levels after tapping into that long wick, and as we leave this level, we can then take longs or shorts inside of the lower time frame PD arrays in the opposing direction. So in this case, as you can see here, we had this long wick, we came lower into that 50 and 75% level, but on the lower time frames you can see we came into that level, and then we saw that break higher. This indicates that price has found support at this lower wick level, and now we can anticipate higher prices taking along here inside of this lower time frame fair value gap, or even inversion fair value gap or order block, whichever one you use. So let's get on the charts and see this in action. So coming into the first chart here, we have this low, as well as this low as 3 long wick levels. So this is the case scenario of how we would use long wicks to anticipate higher prices inside of the marketplace. As we came down into this level, we found support and then left it, and then soon after leaving it, I can be confident taking longs here in some type of lower time frame PD array to anticipate higher prices back above this high. But as you can see in this example, we completely broke through that long wick. We didn't even hold support. So I would then use this case scenario on the next candlestick. I would anticipate some type of retracement for that continuation to the downside, back down into this lower wick level. And as you can see, it came down into that lower wick level, found that support, pushing back higher until we reach back up into this bearish order block. And now we come here. So let's look at this wick level. We broke through that wick level with a body close. As you can see, the body close, that's not a very good signature that we want to look for. So I'm anticipating if we can get some type of pullback, I would anticipate shorts reaching back down below this wick to fill in this wick level and take out this low. So let's see what happens. We then get that retracement just like so. I'd probably take a short here around this mitigation block level. And let's see what happens. We then fill in this wick and eventually take out this lower wick level. So as you can see here, this is a good signature we want to look for. It came down into that lower level with that wick, left it, signaling buyers were down here. They stepped up, now pushing price to the upside, taking out this high. Buyers were not met at this lower wick level, so we broke lower. We're anticipating lower prices. And then once again, buyers were not met at this level. We came back for a retracement inside this mitigation block level for that continuation to the downside. So this is how we can use the long wicks to forecast whether we're going to be bullish or bearish based off of is price find support at this level. So let's get into some actual entries here and how we can use it from a top-down analysis. So as we can see in this depiction, we're reaching up into this 50% level of this long wick. I'm going to go down to a 15-minute time frame to see do we break away from this level, and if we do, I'd want to take a lower time frame entry. So coming into a lower time frame here during the London session, I want to see if we can break away from this long wick level to where I can then take my entry. We come into that 50% level of that long wick, and then we see this massive break to the downside, giving us this inversion fair value gap. I want to see if we can come back into this inversion fair value gap to then take a short, capitalizing on this move. So I'm going to put my limit order here at the opening of the inversion fair value gap, stop loss back above these highs, and let's go for a 1-to-1 below these lows, and let's see how it plays out. Comes back up into that inversion fair value gap, and TP hit just like so. So we identified on the higher time frames, we had this long wick level. We incurred our Fibonacci from low to high, 50 and 75%. Lower time frames, we come into that level, break away from it strongly, create this inversion fair value gap to where we went short, and we capitalize on the move, taking out this low. Very, very solid. That's the inversion fair value gap model using these long wicks. Now we're looking at here on gold on the 4-hour where we have this long wick level. Let's go down to the 1-hour here, and as you can see inside of that level we have this 1-hour order block. Just like we mentioned, these long wicks on the higher time frames tend to be lower time frame order blocks. So if we can reach up into this long wick level and order block level, we can then anticipate a break from this level to then see that continuation to the downside. So I'm going to go down to the M15 here and anticipate price action to come up into this level. And if we can get that rejection, I'd want to take a lower time frame short. M15, we reach up into that 50% level. Let's see if price is willing to leave this level as of now. We get that change in state of direction, right? This last up close candle, we break straight through it, giving us this bearish order block. After tapping into that 50% level, let's put a limit order here at that bearish order block. Stop loss back above these highs, and let's go for a almost 3-to-1 hour back down into this bullish fair value gap. Let's see what happens. Price then taps us into that bearish order block, and then the rest is history. Just like so, super solid 3-to-1 hour trade using that higher time frame wick rejection order block level into that lower time frame M15 order block after we get that change in state of delivery. Next, we're looking at GBPUSD, and on this Friday it was NFP. So when we are trading news like NFP or CPI, this is a really good telltale sign whether we're going to continue higher or lower after we get that initial NFP or CPI or even FOMC move. So we have this wick level. If we can close with that body wick level below this 50%, then that's indicating bearish price action, and we would then anticipate lower prices during NFP back down into these lows. But if price were to come down into this level, give that rejection and push higher, then that would indicate price has found support at this wick level after that NFP move lower, and we can then anticipate higher prices back up into this opposing wick level. Coming down into the lower time frame here, I want to see how do we react after tapping into this wick level. So as you can see, we had that initial move lower from NFP, creating that long wick level, which is a M15 order block right here. We just tapped into that 50% level of that long wick. Let's see how do we react after tapping into it. We then see a massive move to the upside, indicating that price has found support at this 50% level and it wants to leave it. Now that's a very, very good signature, and I want to see price action give some type of pullback or some type of PD ray for me to get long back up into this bearish order block or higher time frame wick rejection level. Price then creates this bullish order block. I want to see if we can break above this bullish order block, given that change in state of delivery, pull back into it. I want to then take longs back up into this level. We then break above that bullish order block. I want to put my limit order right here inside of that bullish order block, stop loss just down here for a 2-to-1R back up into this opposing higher time frame wick level, as well as M15 bearish order block. Let's see how this then plays out. We come down, tag us in, and then eventually TP gets hit for that 2-to-1R at that opposing wick rejection order block level. So that's going to be it for the video. I hope I was able to explain this in a way that you guys learned something and actually gained value from it. Make sure you guys are liking and commenting. That shows me that you guys really like the content, and I'll keep producing. I'm Arkham. Be safe. I have released my private mentorship where I give daily lessons on technical analysis, fundamental analysis, psychology, risk management, as well as live trading and much more for your trading success. If that's something you guys wish to check out and want even more content and gems from me, not shared anywhere else, it will be the first link in the description or the first link in my Instagram bio if you wish to follow me on there as well, at Arkhamtrades. Thank you for watching.